In the cold dawn of January 2022, Wall Street woke up to fear as screens glowed red and the great tech giants began to fall. Investors who once believed technology stocks could only rise suddenly watched billions of dollars vanish in hours, and the emotional shock rippled from New York trading floors to quiet homes across America. For years, companies like Netflix, Meta, Amazon, Google, and Tesla had been symbols of unstoppable growth. Then inflation surged, interest rates climbed, and the dream cracked. The Federal Reserve, led by Jerome Powell, began the fastest rate hiking cycle in decades, and cheap money disappeared almost overnight. As borrowing costs rose, investors fled risky assets, and tech stocks were hit first and hardest. By late 2022, Netflix had lost more than 60% of its value from its peak. Meta, once Facebook, collapsed by over 70%. Amazon, the empire built by Jeff Bezos, slid into a brutal bear market. Across the nation, retirement accounts shrank, startup dreams stalled, and confidence faded. Yet in every market collapse, history quietly prepares the stage for a comeback. To understand what comes next, we must return to the roots of these companies and the forces shaping their future. Netflix began in 1997, founded by Reed Hastings and Mark Randolph, as a simple DVD-by-mail service that challenged the video rental giant Blockbuster. Few imagined that this tiny startup would one day redefine global entertainment. In 2007, Netflix launched streaming, just as broadband internet spread across American homes, and the company rode that wave with near-perfect timing. By 2013, original shows like House of Cards signaled a bold new era. By 2020, during the pandemic lockdowns, Netflix became a lifeline for millions trapped indoors, and its subscriber base exploded. But success bred competition, and soon Disney, Apple, Amazon, and HBO launched their own platforms, igniting a fierce streaming war. In 2022, when Netflix reported its first subscriber loss in over a decade, panic erupted. The stock collapsed in a single day, wiping out years of gains. Yet inside the company, a transformation was already underway. Under CEO Ted Sarandos and co-CEO Greg Peters, Netflix began cutting costs, cracking down on password sharing, and introducing an ad-supported tier to unlock new revenue streams. By 2023 and 2024, those changes started to pay off as subscriber growth returned and profits stabilized. Wall Street slowly noticed the story was similar across big tech. Meta, led by Mark Zuckerberg, faced public backlash, regulatory pressure, and massive spending on its risky metaverse vision. In 2022, Zuckerberg announced sweeping layoffs, cutting over 20,000 jobs in one of Silicon Valley's largest workforce reductions. It was a painful reset, but it forced discipline. By 2024, Meta refocused on artificial intelligence, advertising efficiency, and core social platforms, and earnings rebounded. Amazon followed its own harsh path, slashing costs, closing warehouses, and laying off thousands, while doubling down on cloud computing and automation. Even Google, under CEO Sundar Pichai, trimmed teams and accelerated AI investment to protect its search dominance. Meanwhile, a new technological revolution was gaining speed. Artificial intelligence, once a distant promise, became a commercial reality. In late 2022, OpenAI released ChatGPT, triggering a global AI arms race. Nvidia, Microsoft, Google, Amazon, and Meta poured billions into data centers, chips, and software. This wave revived investor excitement and repositioned beaten-down tech stocks as essential infrastructure for the future economy. By 2025, analysts at Goldman Sachs and Morgan Stanley began calling the tech sell-off one of the greatest buying opportunities of the decade. Valuations that once seemed dangerously high now appeared historically cheap. Netflix, once priced for perfection, was suddenly valued like a mature media company, despite its global reach and data advantage. Hedge funds quietly increased their positions, long-term investors returned, retail traders who had sworn off tech began to dip their toes back in. The emotional cycle of fear slowly turned into cautious hope. Behind the scenes, America's economy was shifting, inflation cooled, interest rates stabilized, and consumer spending adapted. Families still craved entertainment, connection, and convenience, all delivered by technology. Businesses depended more than ever on cloud computing, digital advertising, and AI-driven insights. The backbone of modern life remained tech. By early 2026, the Nasdaq had regained much of its lost ground, and beaten-down stocks led the charge. Netflix shares surged as subscriber numbers climbed and profits beat expectations. Meta posted record free cash flow. Amazon's cloud division regained momentum. Nvidia soared as demand for AI chips exploded, yet the scars of the crash remain fresh, reminding investors that markets move in cycles, not straight lines. History offers powerful lessons. In 2000, after the dot-com bubble burst, tech stocks were declared dead, Amazon lost 90% of its value, Apple nearly went bankrupt, yet those who invested during that dark period saw life-changing returns. In 2008, during the financial crisis, fear ruled and stocks collapsed. Once again, those who bought quality businesses during panic were rewarded. The 2022 to 2024 tech downturn now stands as another chapter in that repeating story. The companies survived, they adapted, they emerged stronger for every day. Investors, the lesson is simple but not easy. The greatest opportunities often appear when fear is loudest. Buying great businesses at discounted prices requires patience, courage, and discipline. It means focusing on fundamentals, not headlines. It means understanding a company's long-term vision, not short-term noise. It means remembering that innovation never stops. Netflix is no longer just a streaming service. It is becoming a global entertainment ecosystem spanning films, series, live sports, gaming, and advertising. Meta is no longer just social media. It is building the AI tools that shape communication and commerce. Amazon is no longer just online shopping. It is the infrastructure of digital business. These transformations take time, and markets often underestimate them. As 2026 unfolds, beaten down tech stocks are no longer symbols of excess. They are reminders of resilience. They show how failure, pressure, and criticism can forge stronger companies. They reflect the restless energy of American entrepreneurship, and they reveal a deeper truth about investing. The future is never built in comfort. It is built in uncertainty, risk, and bold decisions. For those willing to look beyond fear, today's bargains may become tomorrow's legends. So as the markets write their next chapter, one question remains: will you watch the comeback from the sidelines, or will you be part of the story?